Archer Aviation trades around $8 with a $5 billion market cap, and it's down about 13% this year, but up more than 117% in the last 12 months. So is the stock going higher from here, or does the chart give most of that back? I mean, I'm cautiously bullish, right? But I also want proof. Here's the setup. Midnight is built for 20-mile city hops with quick turnarounds. Their factory in Georgia is real, and Stellantis is on deck to scale production. Now, the hard part. In Q3, Archer reported a net loss near $130 million, with operating expenses around $175 million and R&D coming in at $121 million and rising year over year. Liquidity, though, it's the counterweight. Archer holds roughly $595 million in cash and about $1 billion in short-term investments. So the runway to hit their milestones is there, but volatility, it's the tax that you pay for it. The 5-year beta sits near 3, so this name can rip higher and it can sink just as fast. But here's the signal I'm watching that I think most of us are skipping. Early routes tied to Abu Dhabi and the defense line with AFWERX and Anduril could smooth the path to real revenue while certification grinds forward. That's why in this video, you're going to learn the 3 milestones that matter. The cash burn, or the cash burn math that actually decides its survival, and the exact spots where I would add or step aside. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. And if you want the clear playbook on Archer, you're in the right place. So with all that out of the way, let's get into it. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/Ricko to get your 10 stock picks right now. Archer Aviation builds electric air taxis to make short city trips feel effortless. They're headquartered in Silicon Valley, and the company's mission is to develop the technologies and aircraft that power the future of advanced aviation, serving both commercial and defense customers in the States and abroad. So Archer wants to make everyday flying feel as normal as booking a rideshare. They're revolutionizing air travel with Midnight, which is an electric vertical takeoff and landing aircraft, or an eVTOL. It's purpose-built for high-frequency urban hubs. Midnight rides on a proprietary distributed electric propulsion platform. It carries 4 passengers plus a pilot and is engineered for back-to-back trips with about 20 miles with minimal charging between legs, which is precisely how real riders move around these dense metros. And I'm betting that short, repeatable legs with quick turnarounds are the unit economics that matter in urban air mobility. The systems blend Archer's own electric propulsion and flight control tech with components from leading aerospace suppliers that are already used on certified aircraft. And this is done to reduce certification risk, shorten timelines, and control costs. So they're lowering the regulatory risks by using proven parts where it counts while innovating on architecture. Archer plans 2 lines of business: selling aircraft and services to operators through Archer Direct, and operating an app-based aerial ride-sharing service in select cities through Archer UAM. And that split matters because it gives them both B2B sales and a consumer network effect if the routes stick. They've also got a defense line anchored by a next-generation vertical takeoff and landing developed in collaboration with Anduril and the Air Force's AFWERX program. And remember, defense demand can act sort of like a hedge while commercial routes scale. Archer also constructed the ARC, and this is a high-volume manufacturing facility in Georgia that's going to be used for its initial aircraft production, with Stellantis supporting contract manufacturing to scale. The facility is designed for expansion from roughly 350,000 square feet to 900,000 square feet and has a long-term goal of more than 2,000 aircraft per year. And Tesla did something similar when they scaled their Gigafactory. I mean, capacity on day one shouldn't be the goal. Scalable capacity is. Next is whether regulators and first routes line up in time with the factory's ramp. Archer's working with aviation authorities globally and aims to begin commercial operations in Abu Dhabi and then ramp from there as other networks come online. Initially, the target is premium airport shuttles and later broadening into a network at scale. Now, let's see if the stock reflects that roadmap. Today, Archer stock trades at around $8 at a market cap of about $5 billion. That price tells you sentiment, but the market cap gives you expectations. Year to date, the stock has dropped around 13%, but it has grown over 117% over the last 52 weeks. So momentum is real, but near-term drawdowns remind you that this is still a story stock. And with that disparity, it's also important to look at volatility. Looking at their 60-month beta, expect Archer stock to jump around 3 times as much as the S&P 500. So position sizing matters way more than usual here, especially when beta is this high. Okay, so let's have a look at under the hood and see what their financials look like, because the cash and the burn is going to tell you how long Archer's story could run. I mean, this is the kind of stuff we talk about on my Discord server all the time, so let's get into the nitty-gritty here. Archer Aviation recently released its third quarter financials, and yes, it's still in the pre-revenue stages. So financials start with operating expenses, which reached $175 million. And this was driven by R&D costs of $121 million. And that was 34% more than it was a year ago. At the same time, total net loss came in at roughly $130 million, which is much more than the $115 million loss that it reported in Q3 last year. At the same time, interest income increased to $16 million as their balance sheet cash grew and other income turned positive due to fair value items. Management is clear that operations have not yet generated revenue across its planned lines of business, which is exactly what you might expect at this phase of the program. So I'd say that the P&L is still red, but cash is doing some legwork in the background. And I think that's normal for certification stage aerospace companies, where revenue lags the engineering. Now, let's take a closer look at the balance sheet, because there's something important that I want to highlight here. Archer held around $595 million in cash and cash equivalents and about $1 billion in short-term investments and around $7 million in restricted cash. This liquidity enables them to continue advancing with certification and factory readiness without losing any momentum. And, I've learned that runway plus milestones equals survival, right? And the way that they've been spending seems quite normal. For the first 9 months of 2025, operating cash outflow was about $304 million, just a little bit higher than the same period last year. Investing outflow of about $1 billion largely reflects the shifting excess cash into short-term marketable securities, not plant overreach. And financing inflow of about $1.2 billion came mainly from a registered direct offering of around $1.15 billion, plus some smaller contributions from their ATM program and PIPE, giving Archer the flexibility to stay on offense. Spending is rising where it should, liquidity is decent, and the capital stack, it's simple. If execution can continue to align with the certification milestones, I think this profile reads kind of like a bridge from prototype to production rather than a detour. Now, this won't be the last time I cover Archer Aviation, so be sure to watch out for more of my future deep dives. But the million-dollar question, of course, in this video is Archer Aviation a stock to buy at these levels? Well, consider this. A consensus among 9 analysts rate Archer stock a moderate buy with a high price target of $18. So there's optimism there, but the street still wants proof. If you expect Midnight to become the ride that people choose for those short trips to the airport, then this is probably the company you want to bet on. But, of course, if you're an investor, you'll also have to be able to withstand the turbulence. Shares are around $8 and it swings 3 times as hard as the broad market. So the potential upside is real, but so is volatility. But what do you think? Are you buying Archer Aviation right now, or are you waiting for something more? Let me know in the comments below. And while you're there, if you found the video helpful, don't forget to like and subscribe because it helps others find the video, it supports the channel, and you won't miss out on my future deep dives. Well, folks, that's it for me today in this video. I want to thank you so much for watching, and I'll see you next time.